Welcome to the Nichols Tax Update podcast. Here is the standard disclaimer. The only thing I want to emphasize is how much I am in debt to tax notes today published by tax analysts. In my opinion, the preeminent source of information for tax professionals, and that's where everything in this program comes from. So what do we got? Speaking of everything in this program, federal agencies have jointly issued regulations now to prevent surprise billing for medical services. The new administration sent out an executive order ordering these agencies, 4 different agencies, to write regulations, and they did, 295 pages worth. Next, frequently asked questions on taxable grants to transportation companies. Big deal, big announcement, made a headline, 2 frequently asked questions. Next, the first indictment involving conservation easements winds up being based on conspiracy, wire fraud, and false returns. Standard misbehavior by tax miscreants. And a Christian group gets their exempt status after all. We talked about that a couple of weeks ago. The IRS folded in the face of some little bit of pressure. Next, reporting qualified charitable contributions from your IRA. In case you wondered about that, the IRS explains it, makes it simple. Guidance on research credit for taxpayers that expense R&D costs on Accounting Standards Codification 730 financial statements. As I think those of you who've been involved with this know, that's a change in your accounting method for federal income tax purposes and requires some amortization of the change in method, which will affect the amount of research credit you can claim. And then guidance on Code Section 250, the Foreign-Derived Intangible Income Deduction. That's those last 2 are practice units. You've heard me talk about those here in this program. They are wonderful practice aids. The IRS does a great job of explaining the law. I think they make great training programs for in-house. Assign someone to become an expert, read the material, and have them presented for everyone else, and have a Friday afternoon lunch and learn. A little bit of lunch and a lot of learn. So here we go. 4 bureaucracies issue regulations related to surprise billing. TD 9951 for the Treasury's part. These interim financial rules from Treasury, Labor, Health and Human Services, and one other. There are 4 of them anyway. I'm only concerned with Treasury regs. But they're the same for all agencies. Implement provisions of the No Surprises Act. I was surprised. I didn't know there was one, but it was part of the Consolidated Appropriations Act for 2020 that incorporated a lot of these smaller bills that had been proposed by this one and that one. So the No Surprises Act protects participants, beneficiaries, and enrollees in group health plans and group and individual health insurance coverage from surprise medical bills when they receive emergency services, non-emergency services from non-participating providers at participating facilities, and air ambulance services from non-participating providers of air ambulance services. A few years back, I had a motorcycle accident in the mountains out in Arizona, and I wound up in an air ambulance going to a trauma center. The air ambulance was not covered by my insurance program. And at least we didn't, initially they said it wasn't, and I got a bill for $15,000. That's a surprise. And that's the kind of surprise they're talking about. These federal regulations no longer permit, they make it difficult. In fact, they require any entity that wishes to bill these kinds of things to get approval in advance. No surprise. 295 pages of regulations. It's going to be hard for you or me, right? Frequently asked questions on the taxability of grants to transportation companies. There are 6 different buses. There are only 2 FAQs. The Coronavirus Economic Relief for Transportation Services Act, another one of those little ones that was incorporated into the Consolidated Appropriation Act of 2021, authorizes the Treasury to provide grants to transportation service providers including eligible motor coach companies, school bus companies, and passenger vessel companies that experienced annual revenue losses of 25% or more because of COVID-19. Now, what we knew about all these other grants is that the grant money was not taxable and the expenses we paid were deductible. Well, not so with this grant. In addition to covering payroll costs, the grants also may be used for some operating expenses, including COVID-related services and protective equipment, and for the repayment of debt accrued to maintain payroll. However, grant funds are taxable income and related expenses are deductible. So if you have a client that got a Transportation Services Act grant because it's a bus company or even a company that runs school buses, if they got a grant and they used it to pay expenses, the grant is taxable, the expenses are deductible. What a beautiful picture. I searched for pictures of an idyllic scene in the mountains. Here is a babbling brook, stones and green growth. But Georgia CPA Herbert E got on the wrong side of the easement syndication business. He was indicted June the 9th on tax conspiracy, wire fraud, and false tax return charges related to his work on syndicated conservation easement transactions. The Treasury Department alleges that CPA Lewis backdated documents for his clients and failed to report his own income, his commissions, for placing clients in partnerships where a conservation easement deduction was assured by the promoters. This is the first criminal indictment of what the Treasury Department hopes will be many to come. That whole conservation easement syndication business is a quagmire of misrepresentation and false hope. Onward, Christian soldiers. The IRS folds. There's the flag from last time. They said, what? The IRS actually wrote in their letter to Christians engaged that Bible teaching is associated with the Republican Party. My grandmother, who was a staunch Democrat and a Bible-thumping Christian, would have been disappointed to hear that. On May 18, 2021, the IRS Exempt Organizations Director, Stephen Martin, denied the 501c3 application, and then in fairly short order, he relented. The IRS first said that because it had the word Christian, it must be engaging in prohibited political campaign intervention, must be operating for a substantial non-exempt private purpose. No, the president, a nice lady from Texas whose name I can't pronounce, said, no, we want to educate every Christian about their responsibility to participate in government, whether they be Democrat or Republican or independent. We see it as their responsibility to be part of the decision-making process. After the appeal, Director Martin granted the application for 501c3 status, so contributions to Christians United or Christians Engaged will be tax deductible, but Christians Engaged is going to be really careful because they can only have programs that educate voters, that do voter education and encourage people to get out and vote. They cannot get on a partisan side of the debate. Next case. Reporting qualified charitable deductions from your IRA. Do you get a 1099-R? No, you don't. The Form 1099-R doesn't have special reporting for qualified charitable deductions because the IRA trustee doesn't have knowledge to determine whether a distribution meets all the requirements for a QCD. When taxpayers file a paper Form 1040, they can tell the IRS if part or all of an IRA distribution is a qualified charitable distribution by writing QCD next to line 4B. That's all caps QCD. If you're electronically filing the return, you'll get a drop-down box which gives you a choice of QCD, qualified charitable distribution, HFD, health distribution, or rollover, one of three choices, but no 1099-R. Research credit is available to taxpayers expensing R&D costs on an Accounting Standards Codification 730 financial statement. This is a practice unit, 55-page slideshow explaining a revised directive from the IRS Large Business and International Division on computing the research tax credit by taxpayers that expense research and development costs on their adjusted Accounting Standards Codification 730 financial statement, where they disclose research and development costs. The IRS gives us a 6-step process. You can find the practice unit at irs.gov. Search for practice units, plural, and go down the list. The 6-step process is explained with examples and definitions. I found it very enlightening because, frankly, I had not had a lot of exposure to this particular change of accounting method. I don't have large clients that would have been producing certified financial statements required to make this change. Code Section 250, the Foreign-Derived Intangible Income Deduction. Another practice unit. This one's slightly smaller. I think this one's about 24 pages, 24 slides. This new practice unit on the Foreign-Derived Intangible Income Deduction addresses how to determine what income is eligible for the deduction, when you have deemed intangible income, how to identify foreign-derived deduction eligible income, and the FDII, Foreign-Derived Intangible Income Deduction itself. That is, ladies and gentlemen, a wrap for this week. Thank you for joining me. Thank you for your support. Remember to stay safe. We need each other. We've all got to get through this together.